Good morning, traders. Todd Gordon here with tradinganalysis.com. Let's see here. We're live. Good morning, guys. Happy Wednesday. The day after Groundhog's Day, he saw his shadow. So that means we have 6 more weeks of winter. And my wife was trying to tell me if you guys, if you know this, and I should know this because my birthday was yesterday. I've been dealing with this for 42 years. But they say if he sees his shadow, it's 6 more weeks of winter. And if he doesn't see his shadow, it's 6 more weeks until spring. That's what she's trying to tell me. And I don't think that's right. Does anybody know how Puxatawny Phil does it? But good morning and hope you guys are well. Good, a lot of stuff happening. Got kind of a fun market here. We've got NASDAQ futures up 2/3% here, where the Dow's flat, S&P's flat, and the RUT is down. Major earnings coming out of Amazon and Google. A lot of news there. Google crushed it. Hey, thanks, guys. I appreciate it. Yeah, it was fun last night. I was talking to the team in the pre-show. Like, what'd you guys do last night? Anything exciting? And all my friends are like, Todd, what are you doing for your birthday? You're looking at it. I'm just sitting here working. We went out to Hibachi last night because that's what my twin boys, Jake and Brody, they like hibachi. So that's what we did. My parents came out and I worked all day. And yeah, after 40, it doesn't matter. So yeah, yesterday was more day of watching GameStop. We'll talk about that a little bit. Earnings, unbelievable. Amazon now the second company to do $100 billion quarter. Unbelievable. Earnings extremely strong, but it's just being overshadowed by all of these. They're calling them the YOLO stocks, which I'd like to talk to you guys a little bit about that. Get your thoughts. Tell me what you think about it. It's pretty entertaining. I'm involved. I have some GME on the short side. So again, I think it's overshadowing the fact that we're seeing a rotation back into technology. I can't wait to see what Terry has for us on the sector spin. Big tech is just the earnings are awesome. Whether it's artificial Fed liquidity and stimulus the government's putting in there, or we're still in the midst of a strong tech bull market. Alex was tweeting me yesterday saying happy birthday and throwing a jab at me that I'm a perma bull. And I thought that was really funny. And Alex works for us, as I'm sure you know, which he has his own show now, by the way. Yes, I'm probably one of the bigger bulls out there. I've just been listening to reasons why the market should sell off for years now. My portfolio has stayed very long. Did really, really well last year, doing well this year. I just don't see, I think earnings continue to be solid. Interest rates continue to be low. The Fed is firmly behind this market. We have monetary and fiscal stimulus. And plus, guys, I hate to be, this cheery optimist perma bull, but, the technologies that we're putting in front of us, the companies are putting in front of us are literally changing the world. I think COVID was unfortunately a horrible thing that we have to go through, but it's probably one of the best accelerants to the inevitable track that we're on, which is changing in technologies. I mean, for instance, I did a CNBC video the other day on Facebook, and this is just anecdotal, but have you guys played with these before, with the Oculus VR goggles? They're unbelievable. They're awesome. My old RIA that I work for, they gave them to us for a holiday present last year, and they sat on my shelf for about 6 months. And all of a sudden, I pulled them out, and I'm playing with them. And I was blown away. I think I stayed up till like 1 a.m. for multiple nights in a row playing with these things. Like, Facebook acquired Oculus a while ago, and I am so incredibly bullish on the way this is going to change the way we interact professionally and personally. The way kids are playing on video games now, oh my God, my kids, it's like I'm going all over this. I'm just kind of an all over mood. I hope you guys are okay with that. I'm going to install this little circle thing I think it's from Netgear, that will limit the amount of time that they're on their iPads. They're on Roblox, which is going to be an IPO that's coming out soon. The kids between Minecraft and Roblox are obsessed with it. watch that IPO. I think they're coming out soon. I'm going to be owning that stock. But in terms of VR goggles, like the way these kids are gaming, the way they're talking to their friends on a flat one-dimensional screen, when they put, you know, some kind of Oculus goggle on that's got proper form factor, and it's going to change everything. On top of that, look at Zoom Communications doing, and the way people are interacting virtually, professionally. When you're going to put these things on, you're going to look around the boardroom, and you're going to look around and talk to people and your coworkers and feel like you're there. Like, it's going to change everything. And Facebook was the first mover there. And I also saw an article that Apple is getting involved in VR. Now, Google glasses was there. They failed. I don't think the world was quite ready for them, but you know, just watch that. Technologies that are coming out now. Uber's delivering booze. There's just so much happening right now. Of course, 5G is coming, and you know, you look at what Google did. Google advertising was unbelievable. Amazon, unbelievable that Bezos is stepping down. Stock is fine. He's going to work on more strategic and behind the scene initiatives, and who knows what he's going to do when he's got time to himself. So let's just take a look at a couple of these guys on the opening here. Bennett, I'll take the screen if you don't mind. Let's see. So Amazon, pretty much, you know, I came in just a little position in Amazon. Stock's a little higher. I've got it over a couple different accounts. No big deal. Not a huge holding for me, up a little bit there in Amazon. Same thing with Google. Google had a massive move. Let me just check the implied move for Google. So it was expecting $74 after hours, higher or lower. That's the plus and minus one standard deviation on these Feb 5 options. So $75 yesterday's closing. So it was looking to get up to about 2,000, and it's at 2058. So really nice move there on Google. So let's just kind of take a look at some of the charts here real quick. NASDAQ just continues to be, I think, in a strong bull market. And look, I mean, a lot of people are just saying, you know, pullback is inevitable. Oh, everyone, even my friend Tony Dwyer, headline on the CNBC, you know, 5 to 10% pullback. You know, I mean, this is the conversation. Those of you who are regular listeners of the show, you know, and the clients that I've been talking to on the phone, my money management clients, you know, this is the big discussion here. You know, did we already see a pullback of significant size that's the largest since the COVID lows? You know, we just always been talking about this. You guys who are regular viewers, oh boy, here's the BBC moment when the baby walks in on the interview with no shirt on, no less. Oh, she just ran away. You know, is this correction the biggest that we've seen since the lows and since the start of something bigger? You know, we just saw a pretty good sell-off here in the beginning of February. NASDAQ went from 13.56 down to 12.9. I had a good, for my portfolio, I had a good $35,000 swing. I was like, oh, that wasn't fun. It's 2/3 of the way back. Like, we could barely get to the 50 EMA and the NASDAQ, and everyone's like, oh, correction coming. I mean, at some point there will be, but, you know, and as I'm advising the money management clients, I'm like, look, you know, the rambling opening spiel I gave, which is like the technology bull run that we're in is real. They tried to rotate into small and medium caps, tried to rotate into small and medium cap value and growth. But now all of a sudden, we were getting these earnings from large cap tech, and we're just getting a strong move back in, which is being overshadowed by all these small, you know, AMC and GME names, and, you know, kind of losing the narrative, which is, yeah, you know, we're getting really strong moves. You're getting interest rates moving up. The 10 and 30-year yields are pushing up. Stocks don't seem to mind. Crude's holding firm at 55. Getting a little bit of a silver squeeze, whether that's inflationary or whether that's just the Reddit gamers trying. That's fine. Doesn't really matter. Dollar's very stable. So, you know, I'm talking to a lot of the money management clients as I'm getting ready to launch, and you know, a lot of them are saying, God, Todd, as we rotate into your new portfolio, which I'll show you later in the show, and I'll show you my allocations, should we step to the sidelines and let the 5 to 10% correction happen? And man, you know, I just don't see it right now. I know, you know, I'm an Elliott wave guy. I'm born and bred, but, you know, just that correction that I just spoke about, this guy right here, you know, what if that was the correction and we're about to get a massive third of a third move up, which is entirely possible. So I don't know. I'm continually bullish. I'm I don't want to say I'm unapologetically bullish, but I've been probably more bullish than most people. Back here in 2018 and 19, we caught that. We've, I don't know. The market's climbing the wall of worries, and I just continue to see it being strong. And I don't know. Enough of that ramble for now. Let's turn it over to the team, bring in the team, see how everyone's doing. I know Bennett's got a little bit of a head cold, so he's going to power through. Terry, good morning. How are you?
Morning, guys.
Morning, Todd.
How you feeling, dude?
Doing all right. Glad to have you back on the show with us. Happy birthday.
Hey, thanks.
You know, one stock I want to see go public, speaking of Roblox, is Epic Games. Tencent owns about a 40% stake in Epic Games.
And what is Epic Games?
So they are the developers of Fortnite, and Fortnite is a free-to-play battle royale game that will sell character skins for $10 to $20 a piece. And they actually just bought an old mall that they're going to, I guess, turn into their new offices. So that would be an interesting.
An old mall.
Yeah, it's going to be interesting. So that'd be a company to be watching for if it ever happens as well.
And is there anybody out there, and Terry and Bennett included, with this Roblox? Like I put like $50 or $100 in each kid's account so they can build all these different structures and businesses so they can make money. The money's gone. And they're telling me, I was like, there has to be a way, if you play well, you can earn these Roblox. And they're saying, no, you just have to pay for it.
Yep.
And the kids, they get together, they're obsessed. And like, if this is true and the response that kids are giving, this thing's going to be a cash cow. It's going to be a money maker. I don't know. I haven't investigated it enough. But do you guys know? Does anybody watching know?
I don't know about the roadblock, but I'm just saying it's insane how much money people throw at games in the video games, especially on your phone. Right? So there's a lot of free-to-play games, and I play some. I personally don't throw a bunch of money at them. I try to do everything I can the hard way, and I'm never at the top of the list because of that. But there are people with big bucks, and they just seem to they don't care, right? So hey, it's just like any kind of form of entertainment, like even like going to Vegas. Hey, you take a bankroll, and it's how much money I'm gonna blow is that's I'm paying for my entertainment, and people spend the money on the games if the games are good, high quality.
You just made me kind of realize something that you said. If you think of the old days, like I've been trying to play this game, Red Dead Redemption 2, which is like a adult cowboy game. I've been trying to play this for 2 years. I'm probably 10% of the way through. But if you think about it, if you find a good game and you own it for $60 or $80 and you play it for a year, that's a massive value. Maybe the video game industry is starting to sniff that out, that this is worth much more than $60. So maybe that's why the video game industry is going in this way. I thought about that, Terry. You just made me realize that I've had that, like that in terms of if you want a good game, the cost is unbelievable, but that arbitrage is now gone, apparently.
Can't imagine how many quarters I used to pump into video games back in college. So
Right.
Speaking of people spending money on these free-to-play games, I was reading a story about a Twitch streamer who lost his account, or it was hacked. He had like $150,000 worth of skins and whatnot in his account that he had purchased over the years. Just really? Incredible. Yeah.
I don't know. This is a new world. But back to the VR. Are you guys behind this? I mean, Bennett and Terry are very much more tech savvy than I am. I mean, Terry, this is the old school one. This is like 2 years. This is the original Oculus. The new Oculus 2 or whatever sold out at Best Buy. Can't find them over Christmas. These things are so much fun. Like if you want to go have a virtual experience on YouTube, YouTube's got a whole VR, like you can go skiing anywhere in the world on a helicopter, go through the Grand Canyon. Like you walk through the Louvre. Like it's amazing what these things can do. And Cody Willard, who's an old friend of mine, let me just finish this. And he wrote a great article. I got to give him credit on that. He's like, when you're trading and investing, you're going to put these VR goggles on. You're going to look at your platform. Thinkorswim's going to be here. Netflix is going to be there streaming a movie. Spotify's going to be playing behind you. You're going to have like, you know, your friends and family or everyone you want to talk to. I'll have my team back. You just look around, like everything's just, you might not even need computer screens in the future. Like
virtual monitors.
Yep.
That's all it is. It's so wild. Like you can sit there and like Netflix puts you in this nice outdoor setting. You look outside, you see trees and mountains, and then you're in this outdoor theater and you're just watching TV outside. It's pretty awesome.
Oh, I love it.
But the point is, guys, is I am a guest semi unapologetically a tech bull. I think too many people are trying to call the top in this. And Bennett, you know, listen, the 5-wave move that we're exploring the fractal nature of Elliott wave, and that it does break down into smaller and smaller fractals, and that's what we're seeing. We do see a 5-wave move, but then we realize it's a lesser degree. It's not of the same degree correction that we've seen past. And I'm worried this is extending and going to more and more of a fractal pattern. That's the only thing I'm saying. I'm not trying to impugn your work at all, and you know, you and I discuss this all the time. So hopefully that makes sense. Yeah,
absolutely. Speaking of, let's take them into it, hard right edge, and see what's going on in the indexes, and then we'll jump into sector focus. All right, guys, let's jump into the Motive Wave platform, see what's going on in the S&P. What's up, guys? Thank you so much for tuning in once again. Glad to have you back with us this morning. I can't believe we're already in February, 12th of the way through 2021. Last year was certainly exciting. We'll see what the remainder of this year has to offer. So going off the hard right edge, utilizing the Motive Wave platform, let's take a quick look at the wave structure that we reviewed last week, and that was the ending contracting variety diagonal. I've been taking you guys down to the smaller time frames, the 1 hour, even the 30 and 15-minute charts, to kind of dive into, verify the integrity of these substructures, and try to pinpoint perhaps at least a near-term market correction that I do think will be viable. I am still bullish this market. I'm not looking at this as some sort of fifth of a fifth top, which I feel a lot of people have a tendency to do. They'll look at a 5-wave move and think, oh, the trend has to have come to completion, and we're going to see some large corrections. So to Todd's point, the largest correction that we have seen since the COVID March lows of last year was the September 2nd through October 30th pullback. And in the event that we absolutely just continue through this upside resistance zone, which I'm about to outline for you, I have no problem kind of falling back on this particular interpretation. Even in this particular instance, I would anticipate a bit of a larger pullback to get back on board this market, perhaps retest the highs of September 2nd. So let's take you back to the preferred interpretation and walk you through this structure once again. So looking at the S&P off the March low, I am viewing the September 2nd through October 3rd or October 30th correction as the 4th wave position. You know, we've discussed this previously on the show, that the kind of overlapping nature of the advance off of the March lows has been very difficult to count and to identify any Elliott wave count with any high degree of certainty. So at this point, the alternate 1-2 count that we were just looking at is certainly possible. And I got my mouse flying off my stream desk as my dog walked by. I apologize for that. But you know, in the event that we do see that alternate unfold, I'll have no problems kind of falling back onto that. So let's jump down to the 1 hour. In fact, we'll go to the 195-minute half-day chart, and I want to talk about the wave count that we had last week. So looking at the wave structure from last week's show, we were looking for a move up to 38.90 in the S&P. We saw a top at around 38.70, and we did enter a pretty sharp 4.5% or so correction here in the S&P. But the nature of the correction was not at all a trend establishing move. In fact, it was very counter trend corrective. It was a 3-wave move, and 3-wave moves are not trend establishing. Those are typically counter trend and corrective. So you might be looking at this overlapping impulse that we've had and ask yourselves, my goodness, how on earth can we even entertain the idea that this subdivision extends prior to this correction setting in? So the situation that we have here is actually very similar to the February of 2020 market top, and I'll show you that here in just a minute. So coming out of the wave 4 corrections, and I think we did a great job identifying those fourth waves as fourth waves and viable corrective pullbacks. The green wave 3 top concluded with a fifth wave, which had a 61% relationship to waves 1 and 3, which told me it's likely the fifth wave of the degree originating off of that green wave 2 low. At that point, we had labeled wave 4 into the January 4th pullback, which was about a 38% correction. And then we were tracking the ending contracting diagonal, and this ending contracting variety diagonal did yield about a 4.5% correction. I still don't think this is the completion of this subdivision. And what ends up happening is we've essentially reassigned everything one swing point to the right, which is really rather appropriate. When you're diving down into the smaller time frames, it can often be tricky to pinpoint that exact completion. Elliott wave is fractal and can continue to print smaller subdivisions. So what ends up happening is the January 26th top I'm now viewing as wave 3. I'm viewing the January 29th as wave number 4, and the wave number 4 position was about a 50% retracement of wave 3, and it was about 138.2% compared to wave 2 of the same degree. We still had an ending contracting diagonal in the fifth wave position here in orange wave 5, and that did complete and yield the 4.5% or so correction. That just turned into a smaller degree trend, and I do think we re-attacked that upside zone. So that count looks, as you see here, anticipating a move up to 38.90 to 39.20, at which point I do think we'll get a wave 2 pullback. Now, going back to the fact that the largest correction has been this move here that we've identified to the tune of about 10.5%, I'll have no issues looking at any small three-wave move as the smaller degree structure and continue to print higher degree structures here. So I do think we are facing a pullback. We are seeing signs of a near completed 5-wave decline in the dollar, which was one of the 3 signs that I gave you as a potential trigger to signal that correction. We are seeing a near 5-wave completion here to the upside in stocks, but we also have bullish alternates that do continue. So at this point, I'm going to look for 38.90 to 39.20 area resistance to yield just a 3-wave pullback. If we see a 3-wave pullback here in the alternate bullish count, then absolutely I'll have no problem taking advantage of that correction and looking to deploy into it. Now you might be asking yourselves, my goodness, if we're looking for a wave 2 from 38.90 to 39.20, and wave 2s can take you to a variety of retracement levels, what's a key indication that we can kind of fall back on to help determine if in fact this alternate's at play? Well, one of the indicators that I've been showing you guys has been the put-call ratio, and the put-call ratio is often utilized as a contrarian indicator. And you'll notice here, as we printed the most recent market top, we did see kind of a lower extreme in call buying. However, given the fact that the markets are continuing to move higher and we are projecting that continued upside, if we continue to see upside call buying activity and we see this or the next upcoming potential market high be confirmed with a new extreme in call buying, I think that will be another sign that we can really start focusing in on this alternate and looking for the more bullish interpretation. Okay, so looking for 38.90 to 39.20. I do think that's going to give us a bit of a corrective pullback. I don't think it's going to be a drastic, huge market correction, and I do think it's going to be one that will be buyable and one you can all take advantage of. So I do apologize for rambling there, as my dog took the mouse off the stream deck. And that's it for me, just keeping it short. If you guys are looking for a little more in-depth, you can check out our Trading Analysis YouTube. Put out a video last night discussing kind of the internals of this wave count. And you know, one of the other key signs, in my opinion, that we really still had upside left and that the completed ending diagonal was not terminal was the fact that we have many of the index heavyweights still in healthy consolidations that appear to be ready to resolve to the upside. You take a name like Amazon that's been in consolidation since September 2nd. It's very difficult to try to call a market top when, number one, only 2 of our 3 triggers were met, and number 2, you have charts such as the one you have here, which still show significant upside implications. So we'll go ahead and leave it at that. Back over to you, Todd.
Thanks, Bennett. Great work. Great work. Yeah, well, we shall see, and we're positioning our portfolios based on the idea that we could get a pullback. We do have some names that we're looking to position. We have some outstanding trades that we're working. You know, the one thing that I not so related that I do want to focus on a little bit here at some point is the cannabis stocks. They had a ripping day yesterday, led by Tilray. So we'll leave it there. Let's see, just checking show notes here. We're gonna go over to. Do we want to do a break or do we want to bring Terry in, Bennett?
Let's head off to break really quick, and then we'll jump right into sector focus when we get back.
Perfect. Terry on the other side of the break, guys.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to tradinganalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day, we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life seven-figure portfolio with our members who prefer the longer-term investment timeframes, with some medium-term trading and option strategies mixed in as well. So head on over to tradinganalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
Hello, traders. I'm Terry Long with your weekly sector focus. We're going to start with last week's performance of the index and sectors. It was definitely a give back week last week, wasn't it? The S&P and the NASDAQ both gave back about 3.3%, but dang, you can't ignore Monday and Tuesday's price action. Look at this right here. Last week, Friday, the S&P did find support around this 3690 level and the NASDAQ around the 12,850 levels. And well, you can see what's happened just so far on Monday and Tuesday. But yeah, it was a big, ugly week here. Look at the sector performance. Technology and communications, I will note that last week they outperformed the S&P. S&P was down 3.3, but technology and discretionary were only down about 2.9% on the week. Energy took the biggest hit, down about 6.5% last week. So what's been happening just in the last couple of days, Monday and Tuesday's price action here. Monday saw the markets rebound from those support levels sharply. Technology and communication sectors both jumped out in front of the sector leaders. NASDAQ outpaced the S&P on Monday, up about 2.5%. The S&P was only up 1.6 only. That's still a pretty good run. Tuesday saw the rally continue to strengthen, and financials and consumer discretionary now taking the lead. So this is the cumulative now, Monday and Tuesday's price action. Holy moly, we're up nearly 4.8% on discretionary. And here's technology, financials, and communication. And here's the S&P. Industrial's actually bouncing back a little bit after having taken a bit of a back seat too. Now, since we have a new month here, I'm going to give you a quick look at the monthly relative rotation chart here. And so for your long-term perspective, technology has just simply been in a consolidation with some vertical downward a vector here, just indicating a bit of consolidation. But the relative strength of the technology has really not given anything back over these last several months here. And we've got discretionary with a nice vector pointing still northeasterly. Communications has been weakening some, but again, all three of these sectors have maintained their long-term leadership. We've got materials trying to climb, industrials climbing, financials climbing, and certainly we know all about the energy moves that are happening. On the downward side, we've got healthcare, staples, utilities, and real estate continuing to push lower, although there is some initial hints of some rotation occurring here. Let's switch this back to our weekly. We'll take a look at what's been going on our weekly time frame. And so our leading sectors are energy, financials, industrials, materials, discretionary, technology, and communication. Here's discretionary. All of these sectors, all seven of those, good Lord. 7 of these sectors outperforming the S&P. The laggards, again, healthcare, staples, real estate, and utilities. So while energy was down 6.5% last week, you can really see that it's made this huge turn here that I've been calling for. So the rotation is coming out of energy. Energy is losing momentum dramatically here. Financials has actually made a turn. So both financials and energy are seeing momentum decay, yet their relative strength, I will caution you, the relative strength is still heavily out front. Now, one of the things that's caught my eye is I've seen an initial acceleration here. Remember, I've been telling you how industrials and materials were very resilient and they were holding their position quite nicely back here with very short tails. Well, this condition has now changed, and you can see the acceleration, the rapid velocity changes here. Industrials and materials rapidly pushing down into the weakening quadrant. Now, at the same time, I'm going to zoom in here and let's take a look at what's been happening with technology, especially large cap growth here. Technology, communications are both rising, but looky here, if this is just Monday and Tuesday's price action on that last bit of that tail, but we've had a sharp, rapid acceleration back here in technology. And when we add Monday and Tuesday's price action, that's going to put the XLK back up here in the leading quadrant. So if we finish this week out strong, we're going to see technology right back here in the lead after a rapid rotation out, right? So it took a long time for technology to make this turn, right? So we've been talking about this turn, expecting this hook formation and expecting technology to make its turn. It even actually got so close that I was, contemplating that maybe we're going to move over into this lagging quadrant. But then we started getting the northerly vector, and now we're pushing higher here. So let me scroll my notes up a little bit here. So here, over in this improving quadrant, the other thing that I picked up on was this move in healthcare. So this had started to become a northeasterly vector just last week with a little bit more velocity than it has seen. Now, I'm not necessarily saying that healthcare stocks are rising. Some are for sure. Just that they did not correct as much as the S&P did when the market was dropping. But now we've got a northeast heading here, indicating potentially increasing momentum and relative strength in the healthcare sector. And here are your laggards. Let's check out our large cap. Well, let's check out our growth and value here, right? So here on the weekly chart of growth, IVW, and value, IVE, and these are the large caps, you can see here the hook formed back here on the week of January 22nd, and now we are continuing to see that movement in large cap growth. On the daily, here's your daily vectors, right? So five bars here, or 5 segments here is 1 week, and you can see how large cap growth has pushed so strong. Here's a table giving you a listing of all the various small caps, medium caps, and large caps, and this has been make sure that's sorted. Yeah, there you go. So mid cap is currently at the top, but large cap, mid cap, they're both up nearly 4%. This is not been happening for a while. Now this week, I'm going to give your sector focus into one of our lagging sectors, and that is the staples. I want to talk about that. I don't usually like to focus on the laggards, but there's some interesting things going on here. Now, while the staples sector is still in an underperforming position overall, there are a group of stocks down here in this lagging quadrant you can see that have formed northerly hooks, and they may also be on the cusp of a period of advancement here. Certainly, I'm seeing some acceleration going on here in a few of these. Now, every sector is divided into a variety of subgroups or sub-industries here. So let's take a real quick run through what composes staples, or the brewers tires, drug retailers, food retailers, tobacco, soft drinks, personal products, food products, and non-durable household products. Now, this drug retailers, right? This is going to have CVS and Walgreens and Rite Aid in there. This is now actually pushing back into this leading quadrant, you know. But however, the majority of the groups are actually underperforming or even still shown to be weakening here. One of the things I point out here is notice that this hook formed. This is the worst performing group right here, the non-durable household products group. But it started to form started to rotate back to the north. Now this turn indicates, again, like I said, a beginning of momentum returning to this particular group. So I want to take you in. I want to explore that group. First off, let's find it here, and I believe it is this one right here. This is the non-durable household products, and here's the list of stocks that we have in there. Those include WD-40, Spectrum Brands, Vivint, Black Knight, Energizer. This symbol here represents the entire group, and you can see it's this one here that's forming this little hook. But we've got Reynolds, Church & Dwight, Clorox, Kimberly-Clark, and Ocean Biochem. Now, let's see here. I want to take a look at WD-40. This one here. This was their strongest one, and it's actually still pushing further out to the right. Let's pull a price chart of that up real quick and scale it for you here. So WD-40 broke out in October from prior consolidation sideways movement, really strong, and it's been running up in a very bullish fashion up until recently. Now I'm starting to see some price overlap here, so this has been really stellar performance, but this stock continues to show the highest relative strength in the group for now. So let's take a look over here in the left, and what really brought my attention is how many of these stocks over here in this lagging quadrant are now pushing up into the improve, rotating upwards with northerly vectors. Everybody's starting to turn here. So we got Kimberly-Clark, we got Church & Dwight, here's Clorox, Reynolds, and Energizer here, and even Ocean Biochem. Now, many of these stocks have seen a long period of consolidation since last summer's highs, but some have recently made a sharp rebound. Let's take a quick look at Clorox here. Clorox made a very sharp run up here recently, but got rejected at some overhead resistance levels and is pushing back down. You got another resistance level up here at 238, but I'm finding support level here. I think we've got some support coming in around 200, and we'll look to see how Clorox manages this. But given the fact we've got northeasterly vector, improving momentum and relative strength, I think there are investors that are interested, especially institutional investors, in putting more money to work here. I think we're going to see some reacceleration in the price of this. Kimberly-Clark. Now this is your toilet paper run here. So Kimberly-Clark, I think, has also seen a recent pop, but its chart pattern's a little bit different. I've got a support level down here around 129. It made a run up to 140 and immediately got rejected all the way back to 130. So this is a big, huge rejection here, but there's also a possible speculative entry point here. I think if you were to speculate on this, you got a very, very small stops here. But this one needs to develop more before I would put significant money to that. Let's take a look at Church and Dwight. Church and Dwight I think this one may still have some downside support. So it's still in a consolidation phase. It made an attempt to break out through this, failed, and actually failed below its previous low. So it's made a new recent low, but it is running below its 200-day moving average. If we find some support and pick back up here, I think there might be some opportunity. But I've got support down here at 80. There might be a little bit more room to drop. So there it is. I don't normally talk too much about the lagging quadrant stocks, but seeing so many of them with rising interest here, I thought I would give it a shake for you guys. That's all I got now. Back to you, Todd.
Thanks, Terry. Good work there. You know, it's interesting what he's saying about the staples. I have some representation in the staples in the new portfolio, and I'll give you a quick look at some of the names that are in there. Again, I've spent the last 2 months straight building 2 portfolios, a dividend and a growth portfolio for the new money management company. And Bennett, I'll take the screen there. And I do have some staples in there, and I'll just show you quickly. We are waiting between the value and the growth.
If you could take presenter mode.
Oh, thank you very much. So we are putting different sector weights in based on some of the sort of the sector rotation and weighting models. We do have underweight consumer staples because, as Terry was mentioning, they have been a chronic laggard, even in the value portfolio. But then if you look inside, you know, we do have some names that are going to go in there that are showing good strength. Constellation Brands, a great yielder. Procter & Gamble, Archer Daniels, Clorox. Terry just mentioned that one. And of course, Costco and Walmart, I think, are staples. But WD-40, that was an interesting chart. I like that one. So more information coming on that. I just want to talk Bitcoin quickly and GameStop. I am short GameStop. I have, I have some 75 strike puts in GameStop that are going to expire on Feb 19 here. These are the monthlies. Where's my GME? I'm going crazy right there. Okay, so I've got 4 of the 75 strike puts, up a little bit of money here, nothing crazy. I was kind of watching the pre-market here. We traded down to 73. 5 a.m. we went up to 105, setback. We just did an A equals C move and a 118, and right now they're getting smoked. And I just think it's a really interesting experiment in implied volatility. If you look at these things, if you go out, 16 days. You look at these things, and the puts are on the right, the calls are on the left. The implied volatility is so high in these things that there's, even at a 250 strike, there's nothing greater than a 43 delta on this. So if you wanted to, a good way to sort of do that is to buy something deep in the money in terms of shorts. I think that's a better way to do it. But the volatilities are so high, 508%, that the extrinsic value is just absolutely massive. So this is something I've done for the first time in a long time, buying out of the money puts. So right now it's a 20 delta. when I bought these 75 puts, GameStop was 150, $200. It was like a 6 delta, which means in the options markets, they're saying there's only a 6% chance that those go in the money. And I said, that's the most asinine thing I've ever heard. I called TD Ameritrade yesterday. I said, would you please let me do a butterfly? Because if you buy a put, you know, if you look at the put that I have here, I got to go. I think it's in this account. The Vega is the positive volatility. It's 24 Vega, really high. So as the stock is dropping, you're actually going to see the implied volatility drop. And if you're long puts, that's not a good thing. So I called them. I said, will you please let me do a butterfly? Which if you do something like a 75, 50, 25 butterfly, it flattens that Vega out. And I do think that as GameStop drops, which I do think it will drop, you're flattening that volatility out, and that's a much better way to do it. Unfortunately, they're not letting us do it. So, you know, I appreciate what the Reddit guys are doing. You know, they're raiding hedge funds who got very complacent in a massively oversubscribed short position, and they said, you know what, if we can run them, we're going to do it. I say, good. You know, if you put yourself in a position where you can be squeezed like that, good for you. I say let them burn. But unfortunately, fundamentals at some point will matter. GameStop is a broke company. Aside from, you know, possible buyout, if they're somehow migrating to a digital strategy, great. But at some point, the stock is going to go down. And we all know markets in general have a very short attention span. And retail traders also have a very short attention span. So at some point, they're going to forget this, and the fundamentals will matter. So I'll roll these puts out. So that's just, you know, whatever. We can talk about that. But just please don't get too caught up in this. Don't fight this war. You know, you know, the small retail trader who now has time in his hands because he's quote unquote working from home. He's got disposable income now. You know, the 20s and 30s are starting to make money. We're in a bull market, and they're starting to express their views on how the world should be shaped. And I say good for them, but don't get caught up. This is an extremely volatile, very dangerous situation. I'm risking, for me, $8,000. You know, I'm risking less than 1% of what I have in this position, whatever. Okay. So don't try to fight this war. This is very much swimming in shark infested waters. Okay. Let me know what your thoughts are there. Okay. Let me talk about Bitcoin quickly. I put this trade out, or I put this chart out, just trying to be a smart eye. So this was funny. As GameStop was dropping, Bitcoin was moving up. So I was like, oh, this is the classic macro rotation. Seen it a million times. Bitcoin traders roll out of GameStop into Bitcoin. I kind of saw a little bit of that happening. Bitcoin is moving. I put this chart out on Twitter a couple weeks ago. I did put a longer term Bitcoin trade on. Alex is trading it in the shorter term. I put this, oops, come on back. I put this Bitcoin chart out there. The count has changed, but I put this out, looks like January 21st, looking for support and an entry down into 31.5. I was willing to buy it down to 24,000. I thought this would be a WXY correction, looking for then uptrend resumption. Alex has changed the count, and I think it's right. Here's the updated count. So this was the move down into 30,000 right there. We moved up just south of 40, and it looks like we may be triangulating here. So if we start to move above 786 retracement of this, which is going to be at 3708, which we're right there, I would start to call into question this count. But it doesn't matter all that much because I do think, you know, as Alex is showing us, we'll go down in C, up in D, down in E. We really shouldn't be breaking back below 30,000, whether the correction is over somewhere in here, or if we're going to go out in February and then move up. So Bitcoin looks to be absolutely fine on the upside. And I know Ethereum is ripping as well. Ethereum did make a new high here. And again, I'm just tapping on Alex's work here. So I'm not sure what the predominant count is. And don't forget, Alex is doing his own live stream tomorrow. It should be at 9 a.m. Is that correct, guys? Just check me if that's wrong. On
Yep,
YouTube,
9 Eastern.
9 Eastern, yeah. So it looks like Alex is starting to call into a possible ending diagonal here in Ethereum, and Ethereum has certainly shown a lot of strength. A nice pullback there in wave 4 would be pretty sweet. So watch out for that. So aside from that, anything else we covered? Oh, one more thing I do want to talk about, and then we'll end the show. And if you don't mind, throw a thumbs up, guys, if you appreciate the work that my trading analysis team is doing. Peloton earnings coming tomorrow. Bennett, I'll take that screen back one more time if you don't mind. I think, talking about some of the people who are getting on the Peloton bandwagon late, they're talking like 4 to 6 month delays in Peloton. I know they acquired a company for $400 million, which is going to help with the delivery and the supply line. I think the Peloton story just continues to be strong. I like the little pullback here from 171 down to 135. I've held Peloton for a long time. You look at the implied volatility heading into earnings tomorrow, 2/4 after the close. Implied volatility is certainly up there a little bit. Not like we saw back here in October, November, heading into the last earnings, but a little bit of bump. So in line with that GameStop idea with that, I'd love to butterfly that off to minimize Vega. I hold Peloton in multiple accounts, 100 shares. I'm up 11 grand. At one point, it was up 15 grand on a lousy 100 shares. But if we go over here, I think I have a trade set up for you. Well, I thought I did at least. Analyze PTON. Anyways. Well, here's what I wanted to do. I wanted to put something on for you for tomorrow, and I'll do this with clients for the earnings. So expected move is about $12 higher or lower. That's the standard deviation, plus or minus 1 standard deviation. We're at 140, 148, call it. So 48. So they're looking up to 160 possible on that. So just a little options trade. Again, I hold the stock in multiple accounts. On the call side, if we just did a little butterfly to get up to that expected move, 48, I'll send it around 60, drop it down to 50, and then I'll, instead of doing a balanced butterfly, which is $10 on either side, which gives you a curve like this, a P&L graph like this. So you'd risk 170 to make 812 maximum with a pin just into 160. What we like to do is drop the upper call strike, drop it down just a little bit and make it a broken wing. So if we go to 67.5, you take on more risk on the downside, but if Peloton blows out earnings, you don't lose on the upside. You'll make a small 48 bucks. But if you get the pin, you still make 760. So my max loss on this right here is $200. So I just put a little token 5 lot on, $1,000 of risk. Could potentially make 3,800. If it doesn't work, you'll probably be able to salvage 2/3 of that to 3/4 of that. So good little trade. I'm going to put this on trading $1.94. See if I can put this on. Confirm and send. 970 to make 4 grand. And let's see if we can just get a fill here. So anytime I send that in, I just go, as soon as I send an order, I go cancel, replace. I see where they move the market. So the midpoint's up $1.95, so I'll just go $1.97. And sometimes they fill you if you work with them like that, and filled. Okay. A little Peloton trade for you. All right, guys, we'll leave it there. Hopefully you enjoyed the show. Put your questions, your comments, what you'd like to see, in the show. Alex is tomorrow. There's too much. Alex has got too much to fit in this little 45-minute show that we do. We love them, and throw a thumbs up. If you don't mind, let the YouTube algorithm know that you like the trade analysis show. And again, tell us what you'd like to see more of. Wealth management company is forthcoming. I'm going to take the Series 65 here test soon, which will then allow us to launch the money management company. A lot of people are reaching out. It's been really cool meeting and speaking to a lot of clients one-on-one who've been following us for a long time. A lot of people who we never hear from, but like, we've been following trade analysis for years, and we respect the way you guys do business, and we trust you. We think we know you, and it's so incredibly rewarding to have these conversations. So if you're somebody who, has longer term IRAs and or 401k, it's about to roll over money, and you would like allocation, you would like money management, we've got a very compelling offer coming up. Trading Analysis will continue to run. It will be an arm of a wealth management business, all as well. I'm on CNBC tomorrow, I think at 2:20, and that's that. Terry, Bennett, closing thoughts?
Good show.
It's going to be an interesting trading week. Certainly started out with a bang. Let's hope it stays that way.
Yeah. I think I've had enough with these YOLO stocks, though. Let's move on. I don't want to get anyone to get hurt. Please don't get hurt. But let's get back to the fact that companies are making $100 billion in a quarter now. All right,
Go Apple.
Wrap it, guys. Yeah, right. Apple and Amazon. All right, we'll wrap it there again. Thanks for spending your Wednesday morning with us. Appreciate it. Please click that thumbs up button. That's just the way we gain more traction here in the very competitive YouTube space. So thanks, guys, and we'll catch you next week. Otherwise, we'll see you at tradinganalysis.com.
Take care.